Can you really buy a home with just $5,000 saved? The answer might surprise you. Every buyer's situation is different, but for some people, that may be enough to get started. Today, we're going to explain why and help you understand what actually determines how much money you'll need to buy a home. Hi, I'm Ann Hill. I'm a realtor with eXp Realty. I specialize in helping people buy, sell, relocate, and invest in North Texas. And I am here today with Kieran McMahon, who works for VIP Mortgage. Kieran is an amazing loan officer, and we're here to talk about all things concerning the loan process. So Kieran, before we dive into can you really buy a home with $5,000 saved? Tell us a little bit about yourself and your journey as a loan officer.
Sure. Yeah, journey it is. I've been doing it for about 32 years. Been through the ups and downs, and been with VIP Mortgage for about 13 years over in Colleyville, and I've seen a lot of changes in the industry. Again, the ups and downs, the interest rates changing, different programs, different guidelines, things of that nature, and we're still here. So we know what we're doing, and we're great partners with you, and we really appreciate that.
Absolutely. I can't thank you enough for being here today and kind of sharing from your perspective. Everybody's interested in learning about the home buying process and what's going on with interest rates. And we've worked together for so many years. I just think you're amazing at what you do. And I love the fact that you are a one-stop shop and you are very customer centric. So I can't thank you enough for your time.
Yes, ma'am. Thanks for having me.
So Kieran, one of the biggest misconceptions that's out there is buyers think that they need 20% to buy a home. Is that true?
No, it's not true at all. That's probably one of the biggest myths in real estate. You don't have to have 20% to buy a home. Actually, you can go in with 0% down. You can have 3% down, 3.5% down, 5% down. There are some programs that do require 20% down, but the typical home buyer does not need 20% down. 0% down, like I said. There's down payment assistance programs, which are very, very popular right now, especially with the economy. And like I said, 3%, 3.5%, and 5%. So you don't have to have that 20% down. That's a big chunk. Sometimes it's not always a good idea to drop all that down on a house at one time, but it's certainly not required.
I love that, particularly and especially for first-time buyers, because you think about it, things are very different today than they were 20 years ago, 30 years ago. And so I think people are trying to figure out, well, how do I even move forward if I want to buy a home and I don't have that money saved? So it's great, especially for first-time buyers. I think it gives them an opportunity to move from a rental position into an investment.
Absolutely, absolutely. I mean, it's and like I said, the economy, the high interest rates, not necessarily a high interest rates, a little bit higher than what we're used to from several years ago, but the insurance and the taxes are a little bit high, and that couples with the everything else. So it's the less money you put down might fit you better. Like I said, sometimes 20% down is fine for somebody else if they wanted to avoid the MI or something like that, or they're required to put that down, but it's certainly not required.
So Kieran, what actually determines how much money a buyer needs to move forward to purchase a home?
It's not really anything that determines that, but credit score is a big factor in that. If you have a credit score below 620, more than likely we're going to go ahead and put you in an FHA loan, which is 3.5% down. Anything above 620, you could qualify for a conventional loan, USDA loan, which is 0% down, which is a really good product, or down payment assistance. Down payment assistance is very, very popular right now because of the economy. Down payment assistance, 3.5% down payment assistance, 5% down payment assistance. Anything that's left over is closing costs. That would be up to the buyer to take care of, but the seller can contribute. Most programs have up to 6%. Some are as low as 3%, but again, it depends on how much the buyer is putting down and how much the seller can contribute.
Got it. Okay. So for someone that may never have embarked upon this home buying process journey before, can you explain the difference between down payment and closing costs?
Sure. The down payment is basically the initial deposit to get the whole process going. There's closing costs that are involved. That's going to include lender fees, appraisal fees, title fees, prepaids, which are taxes and insurance, and a few other fees, but totally separate from the down payment. Combined, that's your down payment and closing costs. The good thing about it, like I said, seller concessions. The seller can pay up to 6% depending on the product. FHA, you can pay up to 6%, seller can. For VA, 4%. USDA is also 6%. Conventional is 3%. But if the buyer is putting 10% down, then the seller can contribute up to 6% at that point.
Got it. Okay. So just to kind of play back what you said, it sounds like there's multiple different programs a buyer might be able to take advantage of if they want to buy a house. They have their down payment. They also have closing cost fees. But it sounds like there's opportunity based on programs or even, seller concessions or lender credits to be able to cover not just their down payment, but then also their closing costs.
Absolutely, absolutely. In some cases, the buyer can even get their earnest money back. Especially, I'll offer a lender credit to first responders, doctors, medical employees, and teachers.
So you've seen it before, I've seen it. We've worked together on a situation where a buyer was buying a resale home and had very little saved. Not only, you're gonna have to put some type of deposit down if you're gonna buy a house, similar to if you were gonna rent an apartment, you have to put a deposit down. But we also work some of these programs that we're talking about. So the down payment was covered for that buyer, the closing costs was covered, and we saw them get every cent of their deposit back. That they could go and buy furniture or refrigerator or something along the line. So it sounds like it is possible. There is opportunity.
Absolutely, it's possible. We've done it.
So Kieran, one thing I hear all the time is I don't want to waste the lender's time because I know I'm not ready. What would you say to that question?
What do you have to lose? You have nothing to lose. I'm here to help. What I'll do is look at the whole credit profile. I'll work up a credit strategy for you. As long as you follow it, you're going to get into a house. Might not be immediately, might be, a month or two down the road, but, right now is a great time to buy. It's still a buyer's market. As soon as those rates drop, we hope later in the year, there's going to be a lot of activity out there, and lower credit score that you have, it's going to be a lot harder to purchase that home.
Some of the concerns or questions I've heard in the past is, I know my credit's not where it needs to be. More often than not, most buyers are right. They need some help, they need guidance, but every now and then they're surprised. Some of the other excuses I've heard is, I need to file my taxes, or, I've got a life pending or life altering scenario behind the scenes and I know I'm not ready yet. What would you say to encourage those people? They know at some point they're gonna buy a house. They've just got situations that they're trying to manage. What would you say to those people that they want to, they're just not, they're concerned or fearful or they're just not ready yet?
I mean, that's a big, fear is a big emotion, and it's real. But I would tell them to just take a leap of faith. Like I said, it's gonna be harder and harder to purchase a home as the market changes, and it becomes more of a seller's market. So I would just tell them, just do it. It's as simple as that. I'd help them with their credit profile if they needed that. We both have outlets for credit repair. Typically I like to work up a credit strategy for them if it's easy enough. It's just a few tweaks or something like that. I know you've got a credit repair outlet as well. We're here to help.
Yeah.
And I tell you, I've got people that I've worked with for, a year, 2 years, 3 years, even 5 years. It's incredible when you work with somebody for 5 years, and they finally get into a house.
Yeah.
It's very rewarding.
Absolutely, for sure. In terms of walking them down that path, is there a certain time frame? Let's say, it's going to take them 12 months to get their credit cleaned up and you can provide them with a path forward. Is there anyone that you would say no to?
No, I don't. I'll take anybody. I'll work with anybody. I'm happy to do it, and I'm very successful at it. As long as you're willing to follow the plan,
right?
Do as I tell you to do. You're going to get into a house.
As far as credit repair is concerned, what would determine if someone's going to be better suited to go down that path versus you taking a look at their overall situation and giving them guidance for the going forward?
Well, typically I'm going to look at the credit score. If it's 580 or above, I'm going to run you FHA.
Okay.
If it's below that, then I'll typically work up a credit strategy for them and give them, an idea of how long it's going to take to get that score up to at least 580, to where they can at least qualify for that loan. Typically 600 or above is you get a better interest rate, but 580 is the threshold there for the 3.5% down. And like I said, if you follow that plan, you're going to get into a house.
Is it a guarantee if someone has a middle score of 580 that you can get them approved? Are there some constraints there if someone's at that 580 credit score?
Sure. So there's something that's called automated underwriting, and all underwriters approve loans through that. So 580, if you get an approved eligible, you're good to go. If it's anything less than that, maybe a refer, then it's going to be a manual underwrite. It's a different type of underwrite, but it's definitely, you still get into a house with that.
Perfect. So we talked about some different things that I've heard from buyers that they know they want to go down this path of home ownership. They're just not ready because of whatever situation that they're currently facing. What would you say to somebody that isn't ready? They're not going to call, they're not going to pick up but they know at some point this is what they want. What would you say to that buyer?
Well, we know it's a big step, but I would just tell them just to do it. Just call your lender, just talk to them, fill out an application, have them pull credit, see where you are, see what you can afford, see what you're comfortable with. That's one of the biggest things that I stress is the comfort of your payment. You don't want to be house poor. So you got to know what you're getting into, what to expect, so there's no surprises later in the process.
Right, and everything that you're saying is you need to have a plan, or you want to have a plan, because this is most people's biggest purchase that they'll ever make in their life is their home.
Absolutely.
So having a plan is so important. If you don't know where your target is, it's so hard to determine, next steps. So
Absolutely.
So Kieran, I shared some of my examples of working with buyers and clients, and what I'm hearing from my side. From your perspective, what do you feel is the biggest misconception out there that's deterring buyers from moving forward, stepping into home ownership?
You don't have to have perfect credit. You don't have to have a large deposit, a down payment. You don't have to have all the answers. That's my job. I'll help you, guide you through that, and we can work on it together and get you a house and get you owning the home as soon as possible.
That's good. What would you say to the buyer that they look at Zillow and Realtor.com daily, dreaming, watching the new listings come and go, pass them by? They just won't move forward because fearful of the rates today. What would you say to that buyer?
Nobody knows when the rates are going to go down. Nobody knows if the rates are going to go down. What we do know is values keep going up. So, if the rates don't go down, but the values keep going up, you're going to be spending more in the long run. So it doesn't make it's not a good financial decision just to wait. The term, marry the house, date the rate.
Yes.
Get in the house. If the rates do go down and it makes sense, go ahead and refinance. That's the best course of action that I can advise.
That's great advice. So Kieran, what's the one question you wish buyers would ask more often?
Yeah, that's actually a good question. I would say, what shouldn't I do? Okay, I've seen it too many times. Too many people shop, use their credit, they buy stuff, their debts increase while they're going through the process. I've seen somebody buy a car, seen somebody purchase furniture, a refrigerator, co-sign on a loan for somebody else. That'll kill the deal. That'll kill the deal. So I wish most people would ask, what shouldn't I do? That would save a lot of time, a lot of money, and disqualify you from getting into a house.
Kieran, I am so appreciative of you and your time and your expertise and just sharing valuable insights as to what you see happening in the market from a lending perspective. I know that there's a lot of information we shared and we did not do a deep dive. So I'm sure people have questions about down payment assistance and the criteria to be able to qualify for some of those programs. And the thing is, I love helping my clients as a real estate agent. Kieran loves helping his customers be able to qualify for lending. So if you have specific questions about what it's going to take to get you qualified so you can move forward into home ownership, don't hesitate. We talked about all the excuses. We want to help you move out of a situation where you're renting into a home ownership stake where you can start investing those same dollars. If you're interested to get more information or to fill out an application so that Kieran can create a plan for you, don't delay, don't hesitate, pick up the phone. We're ready, willing, and able to help you transition into your new beginning. I appreciate you, Kieran. Thanks again. And thank you so much for your time and for watching. And be sure to subscribe. And I look forward to seeing you in the next video.